What's up, everybody? We're back with another episode of Bullish Chips, where we use a proven and repeatable strategy to make money every day. This channel happens to focus on the Bullish Semiconductor ETF, which goes by the ticker symbol SOXL, but the charting method and the trading method that we use can be implemented with any company that's publicly traded in the US stock market. So make sure you hit that like button, and if you haven't already, hit that subscribe and notification button as well. That way you are alerted to when we release new videos. We do release bonus content from time to time, so you want to make sure you're notified when we release those videos. Now, the nightly and weekend videos like tonight's video focus mostly on identifying triggers and targets for trades, ranging from scalps, intraday short-term trades, all the way up to long-term swing trades, or what people call leap trades. So if you want a deeper dive into exactly how we set up our charts, the broadening formations, levels of support, resistance, things of that nature, make sure you check out the bonus content on our YouTube page. We've got a couple of videos that dive deeper into that for you. And if you want a little bit more information about the STRAT, if you're not familiar with it, it is the base of our charting and trading method. So if you do need a quick reference guide, go ahead and check out the description of this video. There's a link to this free quick reference guide here. Gives you everything you need to know for the basics of the STRAT, a little bit on broadening formations as well. So make sure you check that out if you're not familiar with the STRAT. So I do encourage you to watch the full video. We do go over triggers and targets, definitely on a short-term time frame, but on all time frames, and give analysis on all time frames. So I think you'll be happy that you stayed for the full video. Let's go ahead and get to the agenda for today. We're going to, those are the triggers and targets. The agenda, we'll just go over the today's price action. We'll zoom out, look at the week, month, quarter, and year, and then we'll zoom back in to set the 4-hour markers, the triggers and targets. We'll talk about the market maker's expected move for tomorrow, and then we'll get the triggers and targets out of the way as well. So let's just go to the charts, starting off with the 5-minute like we always do. This is how we take advantage of the proven and repeatable strategy. Now, today was a little bit different, right? We had NVIDIA earnings yesterday after hours. The market did not respond very positively towards them overnight. Well, initially they did, but throughout the call, the price started to drop, and by morning, we weren't looking at gapping up or even opening towards the previous day's highs, actually closer to the previous day's lows, and looking at a gap fill reversal. So that tells you a lot already, and then just based off of history, if NVIDIA doesn't do good after earnings, the market doesn't do very well after earnings. So the writing was kind of on the wall for, what people call a Stevie Wonder trade, or a blind put at open this morning. We did refrain from that a little bit, just in case, but we did go down to the 1-minute time frame just because of the situation, which we don't normally do. We like to keep it on the 5-minute up, but that did give you the triggers. There was a higher low in here on the 1-minute, I believe right around here on the 1-minute, and around here on the 1-minute as well. But we just kind of took position once we saw the gap fill was rejected, or the gap fill reversal was rejected, right? We went, filled the gap, tried to push back up to get out of the gap, couldn't get out past the gap, and basically the bottom fell out. So once we got the 2 down here for this 2-1 2 down continuation, we went ahead and entered puts. We did exit part of the position at the week flip, just because that was that is a major point of inflection, and you can see we also got our first green candle here. Now we ended up selling, we had a target limit sell set here, so it's not like we waited around to see what would happen. We just went ahead and took our profit, but you can see this was probably the best chance of getting that bounce before we did drop a little bit further. Obviously we came back, we tested last week's 50% level, had a little bit of corrective activity there on the 1-minute, but then continued to drop. We did sell, there we go. We did sell another part of our position at the week's 50% level, and then we waited for the higher low, higher high right here, just barely, or is equal high, and we went ahead and let go of the rest of the position there. Wanted to wait for something to formulate on, at least the 15-minute, right? This was a big flush to the downside. You don't want to get caught chasing, and so we were looking for, some type of lower high in the 15-minute. On the 1 hour, we did end up getting that in around here, so we did try our hand at another put, and ended up, we started off in positive territory, but ended up just coming back up. We stopped out even. No real reason to take extra risk. Like we said, we've made that big move. This was just to kind of test the water to see if the bottom would fall out anymore. It didn't, so no harm there. We didn't grab any calls for the bounce back up, right, from just where we're at on the chart. It is a decent location to try for the bounce, but that wasn't something we were willing to try today, just based off of internals, right? If we go back off internals, right, let's get this bigger for us here. Come on, there we go. So if we look at internals for today, the tick obviously at or below the zero line for most of the morning. Vol QD was pushing down most of the morning. Same with ADQD. So we did start to get the bounce, right? And from the bounce on the internals as well as position in the chart, right? We're back here towards the bottom of the range. Well, the bottom third of the range, right? The bottom of the range is really down here more towards 60. We'll give it 61 as being the bottom, but we were down here towards the bottom of the range. So it was a good position to take it back to the top of the range. But we really wanted to just let things play out and see what comes tomorrow, right? If we gap up tomorrow morning, so be it, right? We've got long-term calls. But if we continue to push down tomorrow, then we'll just, get back in and, based off of the triggers and targets that we have, to get more price action to the downside. But we wanted to go into Friday pretty neutral. And then if you're familiar with this channel, by choice, we don't trade too much on Friday. We put in a lot of work throughout the week. So, after Friday morning, maybe Friday noon Central Time, we're pretty much done. Just from the standpoint of, wanting to get into the weekend, spend some more time doing some other things. SOXL isn't the only investment that we have. So, throughout the week, we are looking heavily at other investments as well. So, good to get a little bit of rest and not push it all the way into the Friday evening, right? If possible, it's something I'd suggest for other people as well. But anyways, right, so just based off a location, this would be a pretty good location to grab some longs to go back at least to the top of the range. Not saying we're going to go to all-time highs, but a bounce back to the top of the range wouldn't be, surprising, right? If we're looking at this 1 hour chart, right, again, we're in this range. But we violated this higher low here, obviously, right? Violated this higher low as well. So we've definitely made a lower low, but we are coming from the higher high, right? So we just made a broadening formation. That's it, right? We're essentially still moving sideways. Yes, with a little bit more range, right? We went higher high to lower low, but we're still moving sideways at this point. So again, nothing too crazy on the 1 hour. Let's go to the 4 hour and let's actually get a better chart here. Actually, oops, that's not the one we want. There we go. A little bit cleaner here. All right, so on the 4 hour, excuse me, obviously violated these higher lows here as well. But again, coming from a higher high. So at the very worst, just creating a broadening formation. Say we go back to the top of the range from here, then, oops, let's get the right tool out. Right, obviously low, come on, low to lower low. We've got this broadening formation that we've got here, right? So we'll see what happens tomorrow. Could have more downside. Let's see, after hours, yeah, we're down another $1 in after hours, a little over $1 in after hours. So close to 2% in after hours. We'll see what happens. But it does appear as of right now we'll have some more downside. We'll talk about the market maker's expected move for the day tomorrow here in a minute, but just wanted to get a good visual on where we're at, what's been happening, right? Lower low, but we're coming from a higher high, broadening formation. 1 hour, 4 hour, no trend, right? If we go to the day, again, we're just moving sideways. Yeah, we had a little look below and fail. If we want to count the top of the range as like 70 flat, right? Here's a little look above and fail, a little look above and fail with the wick, look above and fail with yesterday's price action. So we're still just trading in the range. We did violate this higher low. So again, no trend on the day either. So it was a bearish day. We had a big move to the downside, but overall, nothing's really changed, right? We're just in the range. We're back towards the bottom of the range, but we're still in the range, right? Zoom out a little bit more here. Take a look at the week. because this is a little important. Let's take this. There we go. So yes, we went 2 up on the week, right? Earlier on, we went higher high on the week, but we're now in a situation where we've got this one. Looks like it's going to be a failed 2 up if we have more downside tomorrow. Right now, we're looking at more of like a doji situation at this. Even though it is red, we're below where the week opened. So at best, we probably finish with the doji, or maybe we get a little bit more body to the upside if we do get upside tomorrow. But don't know that we would get a huge move to the upside tomorrow based off of no real catalyst to send us back up that way. So we have this 1-2 up. So we're looking at a possible 1-2 up, 2 down next week, right? Now the magnitude of the 1-2 up, 2 down is not the low of the 1, but the candle to the left of the 1. And in this case, we're kind of lucky, right? Because the low of the candle to the left of the 1 is essentially where the low of the 1 is. Now, if this candle was not here and we had this 1-2 up, 2 down, the magnitude of that move would be all the way down here at 49. So kind of are lucky in that aspect, just when looking at it from a purely strat perspective. But just because the strat gets completed doesn't mean we don't continue further down. So we could have further pullback even into next week. Again, it's not changing the overall picture, right? If anything, it's neutralizing it a little bit more, right? We're not just dead bearish, like higher low, higher high on the week. We're continuing this uptrend. We're kind of getting pulled back in. But again, at the very worst, we're moving sideways. Still got plenty of room to put in a higher low. And even if we do put in a lower low on the week, we're coming from a higher high. So again, just another broadening formation situation. All right, so from the week, nothing really breaking down. The month, again, we made the 2 up on the month last month, kind of taking off of the board the 1-2 up, 2 down possible situation for the month, which would have took us down here to this $28 level, $27, $28 level. But right, we've got the 2 up, but we've got to watch out now. The low here is a little bit higher than the previous month's low, meaning it could be a little bit easier to kick off a 2 up, 2 down, which could then domino into a 1 combo 2 up, 2 down, which takes us back down to that $28 level, on the month time frame. So again, that's just what could happen. We're not predicting that's what is going to happen. It's still a little ways out as far as the 2 down, right, or even 2 up on the month. Yes, the month is coming to an end tomorrow, but I don't think that we're going to drop $30 in a day. The first day of the month, we're not going to go 2 down, so, or 2 up for that matter. So again, you just got to be patient, see how things play out. From the quarter perspective, not a real lot to say here. We've talked about this plenty of times in the past. We had the 1 combo 2 down, combo 2 up. If you've been with us over the last year, we've been monitoring that since it triggered and been in it since it triggered. So again, kind of talking about it ad nauseum, but if you are not familiar with the channel or new to the channel and not familiar with us speaking about that, we did run this 1 combo 2 down, combo 2 up to the strat, right? The magnitude of that move is the high of the candle to the left of the 1, right, which is up here at 70.08. We reached that, and we're having this little, pull back and forth basically at the top, right? We completed the strat. Now we've got to wait on the higher time frames for these lower time frames to, make a reversal or some type of higher low to continue to the uptrend or something like that before we can really look at anything on the quarter time frame. And the same goes for the year, right? Early in the year, we did kick off that 2 down, 2 up. It ran its to strat completion, and again, not much else to do on the year. So we did make a higher low on the year chart last year, right? By going 2 up this year, that locked last year in as a higher low, just barely. But it would be nice to go get that all-time high at 74.21 and then go a little bit above that to give us that higher low, higher high start of an uptrend, right? So that is, or not start of an uptrend, continuation of an uptrend. I'm sorry, watch my words. So yeah, that's what we've got from the zoomed in and zoomed out view, current and past price action. Let's go ahead and take a look at the market makers expected move for Friday. And to do that, let's bring out this chart. Oops, we'll bring out this chart. There we go. And oops, let's go to the week. Do we have something that's a little cleaner? Oops, not that. Yeah, market makers expected move. All right, so on here we have the market makers expected move charted out. Now to get the market makers expected move, there are a couple of ways to do this. One is pretty easy, but I don't know that it's available on all platforms. I've been using Thinkorswim for I guess over a decade now, so I'm not very in tune with the other platforms. I don't use them. I'm pretty locked in with Thinkorswim, but if you pull up your options chain and you look at the chain for this week or tomorrow, February 27th, on Thinkorswim, if you go over here to the right, you got a plus or minus number in parentheses, and that is the market maker's expected move, plus or minus $3.20, we'll call it 8 cents, from the close of Thursday, which was 65.34. So if we go over here to the chart and we add, where did we go? The other way that you can calculate the market maker's expected move is to take the at the money straddle and add it to the at the money or in the money strangle, and then divide by 2, right? So we would have 220 plus 164 plus 147 plus 258 divided by 2, and you get your 3.279, right? So if we look over here on the chart, we can see this week's candle, and let's go to the day. That's going to be more relevant right here. Yeah, this is what we want. So on the day chart, we can see the market makers expect an inside day tomorrow, right? So we had big movement today. So it's not surprising that they would expect an inside day tomorrow. Kind of let everybody digest the move, right? It's the end of the week, last trading day of the month. It's been a just up and down month, moving sideways. People may be de-risk a little bit before the weekend, and just kind of step back and say, let's wait for the new week, new month, new day, really on Monday as well, before we, make any more, movement with any type of weight, right? It's another reason why we don't trade too much on Friday. A lot of times the volume can drop off. But anyway, if we're looking at market makers expected move low, 62.06 and 68.62, that's for Friday, right? If you're familiar with this channel, if you're not familiar with this channel, we use purple indicators for weekly indicators. We'll saw that. So the purple broadening formations, the purple diagonal lines, those are weekly broadening formations. The purple dashed lines, depending on what they're labeled, those are weekly measurements too. So for the market makers expected move for the week was 76.19 to 58.03. Obviously, we've stayed within that this week. 70% of the time, we normally do stay within the market maker's expected move. But for the day, the market maker's expected move tomorrow, or Friday, February 27th, is 68.62 to 62.06. And that's obviously within today's candle price action. So they're looking at a inside day right now. Again, 70% of the time they're right. So another 30% of the time, those highs or the low or both, depending on how volatile the day is, they get violated as well. So it doesn't mean if price gets to 68, 62, we're going to stop there or we're just going to reject there. No, we'll probably have some corrective activity there or a little bit of sideways action, even if it's on the 1 minute, 5 minute time frame. Before moving higher, if we do continue to move higher. But this is a point of inflection. There's a reason why the market makers use that calculation, and yeah, that's what we're looking at for the market makers expected move for Friday. Right. So let's zoom back in a little bit more here and look at how we'll approach Friday morning. Right. Remember that the proven and repeatable strategy that we use is beneficial for let's get all the markers on here for early morning scalps and early entries into longer day trades, right? Just trying to get all the 4-hour markers on the board. There we go. We've got a pretty compressed overnight range so far. We'll leave it where it's at, but anyways, just to get everything set up, right? We need our 4-hour markers first. That is the previous high a day, overnight high, overnight low, and previous low a day. There's one other 4-hour marker, but we can't market until the opening print or the first traded price of the day, and that is the opening print level. So we do have to wait until price actually starts trading on Friday to mark that. But the rule is you look for higher lows that are above opening print to get into calls, or you look for lower highs that are below opening print to get into puts, right? If you're getting into calls, your target's going to be overnight high and previous high a day. Whichever one comes first is the first target, whichever one comes second is the second target. And your targets to the downside are obviously overnight low and previous low a day. All right, so that's how we play the proven and repeatable strategy. Again, it's for early morning scalps, right when the market is opening, which can also turn into longer day trades, right? If we're continuing to watch the higher time frame charts and the right things are triggering, or maybe you have that domino effect thing going on. If you got triggers, we'll take a look at the 4-hour, 1-day time frame here in a minute and set our triggers and targets for that as well. So if these scalps start rolling into those triggers as well, then obviously you can hold on to those or sell some of them, leave some runners and whatnot. But that's how we play it, right? Higher lows at or above opening print, look to get calls. Lower highs at or below opening print, look to get inputs. All right, let me pull up the 4-hour chart here real quick so that we can look at things from more of a day trade perspective. Again, we've got the range that we've been in for a couple of weeks now. I'm trying to make this bigger for those on phone, right? So basically from like 60 to 70 has been the range. Yeah, we've poked above and below those, but those are basically look above and fails or look below and fails, right? So we are down here. I guess we pushed back up at the end of the day back to the $65 area, but we are, I guess that puts us more in the middle of the range, right? So you definitely want to be patient, right? If we do go 2 down in that first 4-hour candle tomorrow, that does give us a 2-1, 2 down continuation. Not a lot of magnitude there though, right? You enter at the low of the 1 and you exit at the low of the 2. If you're going strictly by STRAT, right? Now, if you look on the higher time frames on the 1-day chart and whatnot, and we see that it will domino into something on the 1-day chart, then obviously you can stay in those or whatever, but would definitely set your stops at previous low a day. Excuse me. If we go to the upside in the first 4-hour candle tomorrow, first of all, the magnitude is much greater, right? So from entry to exit, there's more room, more profit to get, obviously risk to reward. However, we've got these levels of resistance that we've got to push back through just to get back to previous high a day, right? So if we do trigger that 2-1, 2 up, that is a reversal pattern, but we've got things like 67.39, which has been a major level of resistance. That's the 138.2 fib extension of the 2025 price action. You've got last week's high at 68.44, 68.44, which basically lines up with the market maker's expected move high as well at 68.62. So you've got the daily downtrend line that we did pop through there, so I can probably remove that one. But we do have this daily downtrend line right here as well. Yeah, we popped above it, but obviously we got pulled back into it, so it is something to still kind of respect, right? So even if we do trigger that upside, just beware. We've got some road bumps to get to that target, right? Let's zoom out to the day chart real quick. Let's get this a little cleaner here. There we go. And we can see we obviously triggered the 2 up, 2 down, ran the magnitude of the STRAT, right? The magnitude was just the bottom of the 2 to the left of the 2 up. Ended up dominoing into this combo 2 up, combo 2 up, 2 down, right? That reached magnitude as well. So everything's been kind of reached to the downside. We came down, we hit almost a $60 level. We got to 61 something, so almost the bottom of the range. So what happens tomorrow? Do we push back to the top of the range? Do we fall back out of the range and then wait for Monday or Tuesday of next week to maybe give us a pop and then see if we reject off the bottom of this range to show us that we're going back into the previous range we were in before? That is a possibility. So if we do get the 2 down continuation tomorrow, right, it obviously triggers at today's low. First target is going to be the month flip. This is the opening print for the month, which is 59.51, and last week's low, 59.56. So basically the same level. Below that, we've got the last month's 50% level and the market maker's expected move low. So obviously, if we've got past the market maker's move low and we've gone 2 down on the day, kind of all bets are kind of off at that point, and market makers expected move low for the week is definitely going to be in question and could definitely be a possibility for tomorrow. So just keep that in mind. Do know that if we do hit market makers expected move low for the week, it doesn't mean price has to bounce from there. It could just move sideways, or we could just slice through it like a hot knife through butter, looking for this gap down here at 55, right? So beware of that. We could have another big down day tomorrow, even though the market makers aren't really expecting it. Now, if we do end up pushing all the way back up to previous high day and above previous high day, number one, that's going to be a pretty a move that will struggle to make, right? We already called out the levels of resistance above, and so and just the distance that it has to travel. So even if we do get to 71.11, you got to kind of watch out for running out of steam at that point. Again, we're back at the top of the range. How many people will be willing to hold through, to see if we push through? So just that 2 down, 2 up magnitude. What's this? 72.36 is going to be the magnitude for that move. So if it's there, take it, but I don't know that will happen tomorrow. Right? We got a long way to get just to go 2 up on the day. Not even the market makers expect us to go 2 up on the day. So that's what we've got there. Let's go ahead and go to the to our notes here, right? We've been looking at the charts quite a bit. So for Friday, February 27th, there were 213 trading days left in 2026. And the previous close, or the close from Thursday, February 26th, was 65.34. That means that the week flipped red, right? So 65.85 is that flip level. So in order to flip the week back green, we've got to get to 65.85. Now, the month, quarter, and year are all still red. Have to get to these levels in order to flip those red. We don't have full time frame continuity, which means that we should probably have some back and forth until we get back into full time frame continuity. But we do have a majority of the higher time frames that are in continuity. So could just be the week that we have the chop on. Now, we talked about the market makers expected move for the week and how the low could come into play tomorrow. But we also talked about the market makers expected move for just the day, which is at plus or minus $3.28, giving us an expected move or expected range of 68.62 to 62.06. All right. We know we don't have any gaps above. We filled the gap that was created yesterday. We filled that one today. But we do have these other gaps to the downside, so we always like to keep those in our notes, keep those handy. And we talked about from a scalping perspective, especially very early on in the day, we want to look for higher lows at or above opening print to get into calls, or lower highs at or below opening print to get into puts. We also talked about on the 4-hour time frame, if we go to the downside, we get this 2-1, 2 down continuation, triggering at 63.17 with the magnitude of 61.63. And should we get to that level and keep pushing, we've got these extended targets out here for you as well. Now, if we go back to the upside with this 2-1, 2 up reversal, we do trigger at 65.35, but the magnitude is 71.11 in the face of a non-trend, right? We're not uptrending or downtrending. We just want to have some intermediate targets there in case, any of those levels of resistance do either knock us sideways or knock us back down, right? These are those points of inflection where we could see that. On the day chart, we talked about if we continue to the downside, we get this 2 down, 2 down continuation at 61.63, which is the magnitude of the 4-hour strat. And then we've got these targets listed out here for you as well. To the upside, we've got the 2 down, 2 up. If we go 2 up tomorrow, again, we got to get all the way up to that 72.36. But if we do, why didn't we put the magnitude in there? Let's do this right. Do this live. The magnitude of the 2 down, 2 down continue. 2 up, 2 down, 2 up, right? That magnitude is 72.36. Sorry. It's all right. There we go. So yeah, if we go 2 down, 2 up, that triggers at 72.36. What am I doing? 71.11. No wonder that looked weird. 71.11. There we go. Just a little bit of live updating. All right. So if we do go 2 down, 2 up on the day, it triggers at 71.11. Magnitude is 72.36. And if for whatever reason, if we get some catalyst or whatever happens tomorrow, we do have some extended targets out there for you, including that all-time high of 74.21. Now we're talking about the week. This was bold yesterday because it was triggered and in force. Well, the trigger was 68.22. We're back at 65.34, so we're no longer in force. but we left it underlined to show that this was triggered, the 2-1-2 up, and it did reach magnitude, so there's not really too much more we can ask, right? We were looking for some more extended targets to be hit, but it ran the strat, so it did what it was supposed to do. If we are to go to red 3 on the week, we've got to get down to 59.56. It's within reach. With the way SOXL moves on a daily basis, it's within reach. So don't want to see that, but if it does trigger, it's at 59.56. Not a huge magnitude to that move, but it does domino into these other strats. So we've got those extended targets out here for you to the downside as well. On the month, just one more day in the month, we triggered this 2 up, 2 up when we went above 71.98, but obviously we're back down below that level. So no longer bold, no longer in force, but it was triggered, and just want to keep that in mind. Talking about the quarter, we talked about that, as well as the year. Those already ran their strats, and we're just waiting for something on the lower time frame to give us more to go off for those higher time frames. So that's what we've got for our triggers and targets. Yeah, basically it. It's come to the end of the week. Hope everybody enjoyed this video. Again, we try and jam in as much information as possible without taking up too much of your time. So we do appreciate you spending your time with us and tuning into us. Again, a like goes a long way. It's free. It doesn't cost you anything. The channel doesn't cost you anything. We don't charge any memberships or anything like that. So a thumbs up goes a long way, and we do very much appreciate it. Appreciate seeing those same names in those in the YouTube every day, watching the videos, and like seeing the new additions that we get as well, right? We're building a nice little community here. So again, if you enjoyed the video, give it a thumbs up. If you think it might help somebody, go ahead and give it a share, right? Again, that's free. So yeah, that's where we'll kind of leave it. We'll end the video like we normally do at this point, and say that if you're watching this on Thursday night, we hope you get some good rest tonight and wake up refreshed tomorrow. If you're watching this Friday morning or Friday during the day, we hope you got some good rest last night and woke up refreshed this morning, and we look forward to getting out there and trading with you.